Greetings, members, one and all of the Salivation Nation. Here we are Tuesday, and there's no surprise who our special guest is because it is in the title, and I've got an echo here, and that's my fault, and we'll stop that right now. So anyways, I'm going to spend about 2 hours introducing my guest. No, I'm kidding. It is the one and the only Smaul Gld, who is channel is here on YouTube, and he also has his own website, and I believe he's got a channel on BitChute. Is that what it is? Actually, I've uploaded a video to that the other day.
Yeah, I'm working on BitChute too.
Yes, so yes, very cool to have you here, Smaul Gld, and his channel talks about precious metals, about monetary policy, and among other things as well. It's kind of a versatile channel in the precious metal space, but anything that would touch it in any certain way. And by the way, that's not only geopolitics, it's politics, it's domestic politics as well. He covers a wide variety of topics in that space. And so we'll go ahead and start. So how you doing, Smaul Gld? Good to see you. Good to almost see you. Good to hear you. Yes. Hear you too, for indeed. Well, very good. So going back, I guess a very basic question before we really get into your channel, and we have a lot of people popping in here on the side. Some of you who may have forgotten, I was a guest on Smaul Gld's channel, and if you search him out, you can see that interview, and I'll put a link to his channel in the description here below after this interview is over. But what got you into precious metals in the beginning?
Well, like most people, I had looked at the financial crisis and wasn't paying much attention to it until it happened. And then when it happened, like a lot of people, you start looking for answers, and you realize that what caused it was just a tremendous amount of debt, highly leveraged. And then the way they were trying to solve it, once I understood that what caused it, was they were just going to do QE ad infinitum, it seemed. And that's when I started picking up on the channels where they started talking about basically that gold and silver are not someone's, so you don't have any counterparty risk. There's limited issuance of it. And that you learn at one point that governments were restricted by having some type of monetary backing to their currency. So I went down that path and learned monetary history, relearned my Chicago School of Economics history, which I had learned in high school, which talks about monetary policy, but I hadn't learned the Austrian School of Economics. So around 2013, once I had started to assimilate most of my knowledge about what had happened and what was happening, and fairly convinced it was a debt issue, I started my blog not to write about precious metals, but I've been doing for the last 5 years or so internet marketing consulting for real estate agents, for just about any type of company. And I realized that the blog was there just kind of to support my business, and I realized I couldn't write about real estate all the time. So I figured, it's my blog, I could start writing about whatever I wanted. And the reason I started writing about precious metals was 2013 was when everything that I had learned had made sense up to that point. Gold and silver had been rising. It made sense that people were turning to precious metals as a hedge against the reckless monetary policy of the Fed. They were now doing QE3. And then the prices stopped going up, but the people that were covering precious metals insisted, and they still do today, that they're going to keep rising, skyrocketing. And I started to see a lot of stories not panning out. And I started to investigate. I wanted to investigate for myself, and I figured, well, I have a blog. And when I first started, I basically parroted a lot of what I call now gold and silver pumpers. And I basically said, look, QE, they're just going to print QE into infinity. They're never going to raise rates. They're going to do QE4. And I bought into all that. But then I saw that around late 2014, 15, I really started to see cracks in those stories, that those stories weren't panning out, and I wanted to know why. So I started doing my own independent research by looking at all the source documents, trying to figure out the supply and demand, the COMEX, Indian imports, um, uh, Russian gold reserves, People's Bank of China gold reserves. And then I started trying to do my own, not just get the numbers, but put them in the chart form and keep them every month with the US Mint numbers, but then also try to figure out what all those numbers meant in the grand scheme of things. And I started to realize that there's reasons why gold and silver weren't going up, and it wasn't just manipulation. Of course, that's part of it, but there's a lot more going on in the trends in the world, and that's what I started to write about, and I continue to write about today.
Right. And it's fascinating because it's amazing the work you've done. And we're going to get into that in a moment here. But I want to go back to something you mentioned earlier because I think it's important to cover. And just for educational purposes, can you distinguish between the Chicago School of Economics and Austrian economics?
Yeah, the Chicago School of Economics makes sense to people who don't believe in a tremendous amount of government intervention. So before I learned about Keynesian economics, before I learned about Austrian economics, there were basically two schools that I had been exposed to. They were the Keynesians, who believed that in times of economic distress, that the government should act as a player and use fiscal policy, which is government spending,
right,
to stimulate the economy. And by doing so, they could level out the flaws in the economy and make sure that your recession isn't that deep, and that but the Keynesians, the original Keynesians, believed that once the recession was over, you wouldn't continue to do deficit spending. You would then try to build back your surplus. Now, the Chicago school is different in that they believed also, like the Keynesians, in a monetary policy, but they were more along the lines of a free market. So monetary policy was there. Friedman was a Chicago school guy, but he's also a monetarist, meaning they believed that monetary policy did have a place. Monetary policy meaning what the central bank does, fiscal policy meaning the spending of the government through the Congress. They did believe that monetary policy could guide the economy, but after that, they did not want the government interference in the economy. They were for fewer regulations. They were for free markets. They also were for free market incentives like tax cuts and so on. Now, the Austrian school basically is really laissez-faire in that many Austrian school of economics proponents don't believe there should even be a central bank. They don't.
Libertarians' view, sort of laissez-faire, yeah.
Real laissez-faire, and that perhaps even there shouldn't be an income tax. So a lot of the things that I took for granted when I was studying economics and I gravitated towards the Chicago school, I just pre-assumed that there should be a central bank. And then the issue was, what policy should it engage in? That there should be income tax and taxation. And then the better question was, what rate should you charge? Before looking into the Austrian school, which basically got rid of, basically says you don't need either of those two. And so that was interesting to me. And a lot of the Austrian school people were big proponents of gold and silver. So they all kind of went together. But what I'm seeing lately, which is very disturbing, is this type of China worship, because somehow China encourages its citizens to buy gold, and China itself buys gold, and therefore people, the Chinese are smart because they understand gold. Westerners are stupid, and not realizing that if you believe in free markets and libertarianism and Austrian School of Economics, you don't believe in a centrally planned economy like China, which is beyond Keynesian. It's entirely controlled. It's not just a little intervention here or there. Exactly. And I'm fascinated by many of the gold proponents or pumpers that are constantly talking about end of dollar hegemony and game changer and petro yuan and all this stuff. Not because they're making market observations, because they're actually cheering it on. They're actually very much hoping that Russia and China and the BRICS, they've had it and they're going to crush the dollar, as if that's going to do you, an American, any good just because you might have an ounce or two of gold. That's something that I think that when I was following the gold and silver channels, they were, as you say, mostly libertarian based. Many of them Austrian school, Mises Institute. But even now, Mises Institute seems to be infected with this China worship that somehow China is a freer economy than the United States, which is complete nonsense. And you see they have this social credit. They're giving every person in the country a social credit score, and we're going to have the social credit backed yuan. To me, it's fascinating to see how many people have become, I would say, have gold derangement syndrome, that they're so fascinated by anyone, whether it's Turkey or Russia, whoever it is that happens to be buying gold. They want to be like them, and they think that they're their gold buddies, and they're going to lead them to the path of riches, and not understanding that the countries that are doing really poorly and are buying gold, they're doing it because their currencies are in the toilet.
Exactly. And actually, I do want to cover that a little bit more, because I have a theory sort of why they're doing it, but also I want to talk a little bit more about how you kind of busted that wide open, and it's been recognized by big players in the space here on YouTube and within the all of the commentators, serious commentators. But before we do that, personally, for yourself, what I mean is, as far as collecting or stacking or whatever, I know we talked a little bit about that on your channel, but what interest, I think some of, and I don't know if this has ever been asked by anyone of you before, but what do you like to accumulate? What do you have? Are you a gold guy? Are you a silver guy? Are you a bit of both? And what kind and what types, that type of thing?
I'm a bit of neither. It's surprising that I cover this. As a child, I was I had a coin collection, I had a stamp collection, as I mentioned. And then, as I mentioned, I lost track of even paying attention to that stuff. I couldn't even find, the few items that I had. And when I got back into just understanding what went on, I was attracted to things like gold money and bullion vault and places where you sent your money and you did. And I know that goes totally against you have to have it in your hand, but I never subscribed to that, because I don't know if you can go anywhere. And I haven't seen anybody. They always talk about, in a crisis, you want to have, I don't know, a bag of silver and you could trade for it. I've talked to so many people, they have no idea what it is. If you try to hand them, and I remember doing this in 2013, 14, my friend would go into a store. He had like a silver round. He had some, and he trades. Said, "Do you take silver? Do you take silver?" And I'm like, "No. What is that? What are we going to do with that?" So I've never bought into the idea that you have to stack to protect yourself, because I don't see the benefit in it. And it's not because I don't think that precious metals have a place as a valuable asset, but I've never gotten into the idea that you had to have a stack to the ceiling of silver to protect yourself. And I'm comfortable with storing it, with gold money, bullion vault, and they say, well, you can get it if you want it, but it costs a lot of money to have it sent to you. But then what are you going to do with it? I know right. a lot of people think that, well, then you're not protected. But I think if there's a point where you need to spend something, I don't think it's going to be gold and silver. And I think if you're in that case where it's almost Mad Max, there aren't going to be products and services to buy. No one's going to want your gold and silver. They're going to want to exchange for your eggs or for your
right. Yeah. I mean, I think if it ever came to a point where there was a very, by the way, an extremely highly unlikely event of a total collapse, economic collapse, like you said, a Mad Max type of event, the first phase would be, trading foods and getting the necessities and trading and bartering.
Right.
It's only after, but I do think that people will be educated very quickly on what is known as fungible money, and the only thing fungible at the time will more than likely be gold and silver, and maybe C notes, possibly, or maybe some cash. Some people are
silver, yes, but silver has always been a medium of exchange. Gold, not so much. Even when there were gold coins circulating, they never made that many of them. People didn't walk around with gold in their pocket. They walked around with silver coins in their pocket.
Right.
So gold is a store of value, and I don't feel uncomfortable having it in a vault in London or wherever the hell they
Sure. Right. Understand.
Because that's where it is, and it's outside the banking system. And again, what am I going to do with it? Now, as to designs, one of the things that I have done, and I'm very familiar with, just because when I report on the numbers, I'm constantly looking at the new Perth Mint, the new U.S. Mint. I love the America, the beautiful coins. I love the Buffalo. We talked about this one, the Buffalo. I've always liked the Buffalo nickel, and I like the Buffalo gold coin. And one of the things that I like about precious metals is nothing to do with the monetary collapse, is the history of the usage of coinage and how people aren't just satisfied with printing a very bland round with a number on it and the weight and that's it. They really have artisans working on the coins. There's certain designs that look better on silver, that look better on gold. So that's something. It's a hobby of mine, but it's just like people who collect vintage cars. And I don't have enough money to collect, complete sets of the. I wouldn't buy the complete set of the American Eagles because they're all the same. But what I'm saying is, there's so many sets and things out there that are very interesting looking, but it's just not something that I want to like. I don't know. It's something that I think if I really enjoyed and I had a complete set, well, that's not going to protect me because I'm not going to sell that.
Right, exactly. That's right. Yeah, and
so if you like something, you don't want to give it up, and then if you're just going to collect stuff to use as money, who's going to take it?
Yeah, that's right. I mean, and it's something that if I wanted to be completely honest with myself, I think the main reason why I collect and have and hold it in my hand is because I enjoy it.
Right.
And the secondary thing is, well, if I need to sell any given coin or piece of silver bar or something like that, I know I can just run down to my LCS or send in the minimum order to Provident Metals or some other company and sell, but in times of an economic, if there would ever be, by the way, I say that because I always got to put the caveat, because so many in this community believe there really will be an actual economic collapse. I believe probably what's going to happen is there's going to be some sort of reset, another Bretton Woods type situation, a revaluation of our currency. And but nonetheless, I do want to recognize and thank the viewers here for their patience. We're going to get to their questions here soon, but thank you guys. We got a lot of good folks in here. We've got Southern Stacker, we've got Wolfman Sachs, all is one now. Silver Honda's here. Barbara Carbone, Dean, Tomoko's Enterprise. He's one. Actually, I mentioned his channel, Dean. I mentioned your channel on Smaul Gld's on the interview I did with him on his channel about some of the great work that you do and all you silver pourers out there. So, but anyways, well, very good. That's awesome. So, you have basically answered a lot of questions in some of your responses that I had. But I do want to touch base because I think what really, there was an article that I had posted that I did a video on it, and it referenced Smaul Gld. You've done a lot of work researching these numbers that really is groundbreaking, and publishing this information on your website in the form of charts and graphs that I've never seen before. And to me, what really stands out of my eyes is the acquisition of gold by foreign countries, Russia, China, Turkey, and the like. And that work is just amazing, and I think people are starting to take notice of it. And you had mentioned, you touched on it a little bit before, but I think through some of that, this is why you have this opinion about China and how these other commentators and big names in the bullion industry that are supposed Austrian economists or subscribe to that theory. And my theory is that the reason why it's not necessarily so much that they're subscribing to that, to what they're doing and cheering it on, as much as saying that that if they're taking account to it, it's a challenge to the dollar, which means that if it challenges the dollar, then that means it's going to mean that gold and silver are going to shine in their eyes. But I'm in agreement with you that the socialism, no matter where it's tried, never works.
Well, you're right. And the problem with China is, forget that they're socialists and forget that they're a totalitarian country and a totally controlled economy. They are also a massive debt monster. The fact, they talk about the productive capacity of China, but a lot of that production is not profitable, and it's financed by state-owned banks that loan money to state-owned enterprises that have a state goal, which is to produce GDP and employment. And they can do that largely. They've been doing that by exports, but also internally by construction and housing. And so what they'll do is they will build a bridge to somewhere. They'll build housing projects. They'll build multi-story skyscrapers. And then there's no way they're going to fill them. There's no way they're going to make a profit on it. So there's debt been issued in order to build these things. They can't pay back the debt. So the state-owned bank asks the state-owned enterprise for the money back. They can't pay it. The state-owned bank goes back to the People's Bank of China. People's Bank of China says, just lend them some more money. We need to keep it going. Or write off the loan, or don't say it's bad debt, pretend you're getting paid, all kinds of the Sun Tzu accounting, I call it. Or what they do is they then say, well, since you're never going to pay it, why don't you just convert it into equity? And here you have these things being produced, but under regular laissez-faire economics, money does not, capital investment doesn't happen unless there's a profit motive.
That's
but in this case, the Chinese say, well, there is a motive. We need to create jobs. So it's Keynesianism on massive steroids, and you have this government spending. And therefore, you can't say, well, they're doing something different than the United States. And a lot of times they say, well, China has internal debt. That's different. That's okay. They owe it to themselves. But these are the same people that complain about the United States having $150 trillion in unfunded liabilities. You can make the same argument. Oh, well, we owe that to ourselves. It's just Social Security. It's just Medicaid. Nonsense. Debt is debt and has to be paid.
Right.
And there's consequences if it's not paid. So the idea that China is somehow doing something better or different, they're not. And they're actually...
they're currency manipulators, as Silver Wolverine pointed out here. Yeah.
Sure, but if you look at the charts of debt creation, private and government, they're leading the world by far. They've created 5 times more debt in the last 5 years than all the central banks combined. But everybody, and I'm not saying that the United States is a paragon of fiscal responsibility. They're not. But what they're saying is the U.S. is destined, the dollar is going to collapse. Nonsense, because the rest of the world, the emerging markets, Turkey, even China, their economies run, they issue dollar-denominated debt. So the dollar demand is there. And then they talk about the petro yuan and all that stuff, that somehow the dollar is going to lose its hegemonic status because Saudi Arabia is going to sell oil to China and accept yuan, which is nonsense, because the dollar is not backed by Saudi oil anymore to the extent that it's necessary to give it backing, because first of all, only 8 to 12% of international commerce is done for oil. And the reason that people hold dollars today, central banks hold dollars, isn't just to buy oil. They hold it because it's a liquid asset. They hold it to buy other things. But the real thing that I've been pointing out the last 3 or 4 years is, if you do need oil to back your currency, well, the United States is already the world's largest oil producer. That happened so quickly over the last 3 years. And they say by next year, the United States will be the largest oil exporter in the world, which will mean that China will be buying, and does buy, oil from the United States, and so will other countries. So if you need oil backing, countries are going to need dollars to buy oil from the United States. And the United States is also a massive natural gas oil exporter.
That's right.
These people they cherry pick a piece of data like the petro yuan, and then they run with it, and they make all types of assumptions, and it all leads to 2 + 2 = gold. That somehow this means that gold is going to go skyrocketing. We're going to get skyrocketing gold demand. It doesn't mean any of that.
Right. And that leads me to my last question before we take questions from the audience here, or from the viewers. And I did a video talking about, and I forget, I guess it was about who holds the most gold reserves, and we're talking about Russia. And Russia, it was mentioned that Russia is a better position than us because they carry little debt. Can you speak to that? Is that true?
Sure. Well, Russia is a lot different than China. Russia, first of all, has little domestic and external debt. It has a much more prudent central bank. it does very little trade with the United States, so it doesn't have that issue where it's undergone sanctions. It never did much trade with the US, and ever since the sanctions, through the management of their central bank, they've increased their foreign reserves from about 350 billion almost to 500 billion, and they've done that through a combination of gold acquisition, and also, this is what people miss. There's a narrative out there that foreign central banks are dumping treasuries, which is nonsense, because the Russians, who have really no reason economically or just geopolitically, to use that term, to hold dollar reserves, they actually do. And indeed, they hold $98 billion worth of US treasuries. And even though they have 1,892 tons of gold, that gold is only worth 83 billion. So even Russia, which is you would say a sworn enemy of the United States, but of course, big pal with Donald Trump, right? Has less dollar notional value in gold than they do in U.S. treasuries. So when people say central banks are buying gold hand over fist, the dollar amounts are not big. And I always point out that India's gold imports are much, much bigger than whatever Russia buys 220. And they buy it from their own domestic supply. So it's not like Russia's out there in the gold market brokering thousands of tons of gold. Remember, there's 2,600 tons of gold mined annually. And Russia, who's by far the largest buyer, central bank, and they bought a record 224 tons. It's not a lot of gold.
Right.
I mean, when I publish these numbers, Zero Hedge publishes, and everyone talking about the Russians are smart, they're preparing for what's coming. That amount of gold is not going to help them. It's going to help them, but it's not going to solve all their economic issues. And the same thing with China. It's even worse, because I did a chart where I showed even if China has in the country 20,000 tons, it doesn't even come close. Even if you get a price of $13,000 an ounce, it doesn't even come close to covering what they say the debt they have on their books right now. So gold, it's an asset, it's worth something. But when people say you save yourself, protect yourself, the people that have gold in Venezuela aren't saving themselves from anything. I mean, they're actually targets because they have it.
Right. And so Russia's what is their biggest economic problem? Would it be the ruble, or is it?
Russia's biggest economic problem is that they are pretty much a one-trick pony.
Right.
But that's also a strength, because their people are not reliant on a welfare system. They're not reliant on consumerism. So they don't have a rich economy. See, China they've moved, I believe, 350, 400 million people, the largest migration of people ever, into cities.
Right.
That had never even lived in a city before. And that is a massive tinderbox. If they can't keep the employment coming, the sewers working, and, people being fed and so on. So China has to borrow money and do things that you would otherwise not do just to keep control. Russia does not have the like 50 cities that have 10 million people in them. Russia is basically an oil exporter. Its people have a far probably higher tolerance for self-deprivation. You see it through history, Dostoevsky and suffering, and the World War II. They lost so many people. So their problem with their economy is it's not dynamic, but it's also not debt-ridden.
Right. Okay. Very good. All right. Well, thank you for that. Well, if you're okay with taking a few questions from I will answer one that DW asked up above. He asked if you save in PMs. I think you kind of answered that already. I think if anything, you probably do it through a custodian. So you kind of already had answered that one. So guys, if you have a question for Smaul Gld, you can either address him through his channel name so that it comes up orange, so you have to spell it exactly, or put 2 or 3 asterisks in front of the question so I can see it, and we'll ask Smaul Gld questions from the side audience, from the side viewers here. So yeah, anytime you guys want to ask a question, go for it. And while we wait for that, I just will again remind those we're talking to Smaul Gld. channel. He does analysis and geopolitics and things related to precious metals. And I believe he is one of the few realists out here that that understands the value of precious metals in and of what they are, and within the confines of data, and backing it up with all the different resources and stuff he finds through a massive amount of research. So it's pretty impressive.
You know, I want to mention Oaksy just made a point that I didn't make about the Russian economy. It isn't just a one-trick pony. At one point, Russia was unable to feed its people, and it used to have to buy its grain from the United States. Russia has since, as he mentioned here, let me pull it up. What did he say here?
Diversified in farming, yeah.
Yes. Now Russia actually does very good in farming. In fact, there was a point, quick history lesson, you can Google the Great Grain Robbery, when Russia actually managed to buy grain from the United States at very, very low prices. And the reason they had to do that was because they were subject to famine, because they did not have enough food. But now I believe they are an export of foodstuffs as well. So Russia has made some strides there.
They have a good wheat belt. They have a good wheat belt, and
that's right.
Yeah,
exactly. And that's why the Ukraine and all that area is very important to Russia.
Right.
That's a breadbasket of Europe.
Okay, tricky guy, I think, is asking: are there many entities making good money via arbitrage of metals?
That I don't know. I'm sure there's arbitrage in everything.
Yeah.
Are you talking? Is he talking about between gold and silver on the ratio?
I'm not sure. Tricky guy might be able to clarify that. Let's go to Wolfman Sack says, what percentage of one's portfolio should one keep in metals?
I'm not an investment advisor, but I like the example. I don't like not everything that Jim Rickards says, but he gives an example that you can use percentage of gold as portfolio insurance. And I think he says 10%, and I think he has stocks in there. But what I like the idea of is that if you use gold as insurance, generally, if you have a stock market crash, the gold will hold its value or even go up.
Right.
And that can help offset some of your losses.
Yeah.
But I think a lot of people have bought into buying gold or silver and using that as their speculation, and using that as the way they think they're going to make money, when history tells you that that's not how you make money. You make your money, and then you store the money you make in gold, and then you may wish to speculate in silver, because silver is not as good as a store of value. Over the last 5 years, gold has risen 50% versus silver. Silver is actually probably the worst performing investment over the last 6-7 years. I think just about every asset on the planet has gone up but silver. However, that makes silver right now a speculative metal, not a wealth preserving metal, but something that you might get a pop. And you have seen in 1980 and in 2011, for a brief shining moment, you get those massive spikes in silver, but they don't last very long. And that's historic.
That's true.
Go back over.
I think in the long run, though, silver, if you look in the long term, it will be a store of wealth.
It is, but you have to be willing to ride out those big swings, whereas gold is much less volatile. Cool. And also, you don't have to pay as much in storage to store gold. And if you have significant amounts, the amount of silver you have to buy you have to buy 80 times as much in physical weight.
Exactly. We got more questions popping in. Little play on words from Donald in New Mexico. How small is your gold? and John Tangle asked, are you buying Bitcoin at these prices?
I don't really like the cryptocurrencies, but I know that my liking them or not liking them really has no bearing on whether they're going to go up or not. My guess is that these things are going to go up, not because a lot of people believe in them. I think there's more people that don't believe in cryptos than believe in them. But the people that don't believe them are not buying in them, and they're not the ones who are setting the price for Bitcoin. It's the small minority of investors that are interested in Bitcoin, that are buying Bitcoin. There's not a lot of Bitcoin. So unlike gold and silver, you don't need many people or much money chasing Bitcoin because there's not that much of it. And that's why it goes higher. The
Right.
problem with gold and silver is we're seeing fewer and fewer people buying the physical and more people being satisfied with the paper gold and silver, of which there's almost an infinite amount. So even when you get these surges in ETF demand and so on, it's easily met.
Right.
And so that's why I think that again, for speculation, the cryptocurrencies, they can go to zero, but I think they've got far better speculative value than gold. And when they say Bitcoin is digital gold, it's not, because it can't be a store of value if it swings up and down as much as it does. I'd say it's a speculative investment.
Oh,
But
yeah,
I agree. Store of value.
Well, Health Babe asks, gold price seems to outperform the mining sector for quite some time.
That's odd. Yes.
In a long term, do you think the mining sector will catch up at one point?
I used to think that. I don't think that anymore, because what's happened to the mining sector is people haven't talked about this very much. I think the streamers have really become the way to invest in the mining sector, because what they do is they provide the finance. I think it's Franco-Nevada, Wheaton, Sandstrom, Royal Gold, and they convince these cash-strapped miners to sell them their future production at like $600 an ounce for gold, $5 an ounce for silver. So these companies, these miners, are working for nothing. So even if the price goes back up, they've already sold off. They won't get the benefit of the higher gold or silver price. They've already sold off their production. All they get to do is stay in business and pay off their streamers. So I think the streamers, if there is a move higher in gold and silver, they will benefit. They don't own the mines; they just have contracts, and that's a risk that the miners can just say, "Well, screw you," or not, and they get caught up in litigation. So eventually, if you do have rising gold and silver prices and they're consistently higher, like for years, and then the mining company can count on that cash flow, start paying dividends at a higher rate, yeah, they'll go higher. But we saw in 2016, when you had that there was some type of a correlation where the miners went up, and they went up more than gold and silver. But the last 18 months, the gold prices moved up and the miners have just continued to go away. And I think part of that is because there hasn't been a decisive move higher in gold and very little in silver. And because I think that a lot of these companies have exposure, either because they have a lot of debt and the prices aren't that attractive, they're not making that much of a margin, and because a lot of them sold their production to the streamers.
Very good. Well, thank you for that. And we're going to go through these questions a little bit quicker. There's something to pile up here. But Chuck and Plata ask, is JP Morgan holding millions of Silver Eagles? If yes, why? To repatriate?
No, I think that story is complete nonsense, that JP Morgan has any Silver Eagles or any Canadian Maple Leafs. The origin of that story is Mr. Butler believes, I've had conversation with him, he believes that during the periods of time from 2011 to 2015-16, when we had record amounts of American Silver Eagles being sold,
right?
He believed, I don't know why he believed this, but he believed that there was no retail demand. And therefore, if there was no retail demand, there had to be a big buyer. And therefore, that big buyer had to be JP Morgan. Now, I don't follow that logic, but I have spoken to, and I also have known just from my own website, because I have affiliate links, that there was massive retail demand in 2014 and 2015. It wasn't like no one was buying Silver Eagles and somehow the U.S. Mint was producing these wild numbers. It wouldn't make any sense if JP Morgan wanted to acquire silver to buy American Silver Eagles and pay at a minimum $2 over spot for each ounce of silver, and then find a place to store it. Now, remember, you cannot trade Silver Eagles on COMEX. They're not in the form in which you can trade them.
Right. Those are 1,000-ounce bars, right? I think.
Right. They have to be what's called good delivery bars, and they have to be eligible for trading. They have to be stored in a COMEX facility. And so JP Morgan wouldn't be able to sell, unless they were going to open up the old JP Morgan silver local coin stores and try to get rid of it. That just doesn't make any sense. Now, there's another component, though, however, to JP Morgan's silver acquisition. If you look over the past, since 2011, when they took over the Bear Stearns COMEX depository, the JP Morgan depository holds about 120 million ounces, which is a very large hoard. I've done a few charts on this, and only 5 million of that are eligible for trading, are not eligible for trading, are registered to trade immediately. The rest are in eligible form, which means they can flip them over. The question about that stockpile of silver for JP Morgan is, one, is it theirs, or are they holding it for other customers? Two, if it is theirs, why do they have it? Now, some people saying they have it again because they know it's coming and then they're going to sell it when the price skyrockets. More likely, if it is theirs, and I'm not saying it is, it might not, it may or may not be, but if it is theirs, I think they're having that for the purpose of, remember a few years ago, they always talking about there wasn't enough silver in the COMEX to meet demand if somebody wanted to stand for delivery. Well, that's nonsense now because there's hundreds of millions of ounces, or at least they say there is, in the COMEX, and JP Morgan happens to have 125, 129 million ounces of it. So if there ever was an issue where supplies got tight, if the government was working with JP Morgan could use that silver to ease a lot of that tightness, and especially having it accumulated at very low prices, and they can actually make some money too. But I don't think they're buying it as a trade, a one-time trade where they wait 8 years to make a bit of a profit. They make that money in a trade every day. The amount of money they could probably make selling that silver if the price goes up to $30, $40. I think they have that if they do have it for their account or on behalf of a government. It's there as a escape valve that if there were some tightness on deliveries, they could easily satisfy it now.
Very good. All right. Well, thank you. Let's try to run through these. We got a couple of questions popping up, and I know this is one you could probably expand on, but we'll kind of keep it short to kind of go through some of these other questions. But Phil Brown is challenging you. He says the U.S. will not export more oil than Russia or Saudi Arabia. They may produce more, but they will not export more. Do you want to speak to that briefly?
Yeah, the way I got that export more is right now the United States, I think last year Russia became the world's largest oil producer.
Right.
And that's good for Russia because its domestic oil needs aren't that great, so they can export it. There was a report out in Citi, and I've been tracking on my website the exports of U.S. oil exports. And right now, I think the United States was fifth as of some point in 2017. But Citigroup showed a study that said by early next year, the United States will indeed become and surpass Saudi Arabia as the world's largest oil exporter. We'll see we'll see if that happens. I have no way of knowing whether any of these numbers are correct. My only point in mentioning it is, even if the United States doesn't become the world's largest oil producer, the fact that the fact that the U.S. is exporting oil and countries need dollars to buy that oil kind of undercuts the argument that somehow the petrodollar is going to collapse and no one's going to use the dollar anymore and dollar hegemony is gone. There's already demand for dollars without oil. But what I'm suggesting is there's this new demand in the increasing amounts of oil exports from the United States that are going to require U.S. dollars to pay for it.
Very good. Yes. All right. Great. Thank you for that. Just make an observation that I think we can all agree with about from what Silver Wolverine says, that the Chinese and Russian governments may be rich, but the people are poor, and that's the way their governments like it. It certainly does seem to be the case. Tricky Guy asked, would any commodity-backed currency be possible in modern times? It's a good question.
It's a very good question, and I think no politician ever gets elected by promising less in hard times. I saw Kamala Harris out yesterday saying working families need to get free college. You see Bernie Sanders, everything should be free in this country and people need free health care. You see all of that kind of stuff, and that's how they get elected.
Yep.
And if you're already in debt, where's the money going to come from?
Right.
And this is why when people talk about the gold-backed yuan, I think that's absolutely nuts, because the last thing China wants to do is hamstring itself.
So exactly.
That it can't do what it needs to do. If it needs to devalue the yuan. And that's why the yuan is not a major international currency, because foreign central banks don't want to hold it as a reserve asset because they know that China needs to play games with it, may need to devalue it. And China doesn't want to back its yuan with gold. What could happen though, and this is not a crazy theory, is China could demand gold for payment in exchange for its goods from, let's say, Iran. But there's no reason why China would want to back the yuan with gold, especially one that would be redeemable. Because the lesson from the United States was that eventually people just say, well, okay, if I can get gold for the dollars, what do I want these dollars? Give me the gold. And the argument there is, well, China will run a trade surplus, so that'll never happen. But then what's the point of backing the yuan? Because then the yuan would rise in price and mean that its exports would be more expensive, and then therefore they wouldn't have a trade surplus anymore.
And going back to the commodity-based currency, I think not many politicians here in the United States mention it either. The closest that I've seen was in the 2016 presidential Republican primary. Ted Cruz mentioned it as part of one of many in a rules based monetary system, with gold being a small part. But even that was basically just have some sort of ties, something that would sort of keep the Federal Reserve kind of at bay, so to speak, or kind of not tie their hands, but give them some sort of guidelines, so to speak.
Yes, I think it's possible to do the type of thing where you have limited amounts of control, but they would just override that one. And we saw when there was the financial crisis of 2008, they said, oh, what can we do? Oh, we'll just print up money.
Right.
And if you said, no, but you don't have enough gold to do that, they'd say, okay, well, emergency measures, so forget that. Right. I never liked the gold standard because it puts all the gold in the hands of the governments. And then what they have to do, people forget this, that when there was a gold standard, there was a concerted effort to keep the price stable.
Yeah, that's right. Yeah, $35 an ounce for how long?
From 1934 to 1974.
Right.
So when people hoping we have a gold standard, because now you may hope you have a gold standard if you have some monetary policy thoughts, but if you think it's going to make you rich, it's not, because, and also you won't be able to, quote, protect yourself after that, because once they back the currency with gold, they do it at a certain price and it stays there. Well, now there's no point in holding gold anymore because it's not going to go any higher.
Right. Mintmark SI asks, cashless society coming in the future? What will the drug dealers use to trade?
Yeah, I've been covering the cash society about 4 or 5 years. There's a series on the Smaul Gld website called The Dark Side of a Cashless Society, and I haven't finished it yet, but I finished complete articles on it. I haven't finished where the ultimate where it's going, but governments definitely want cashless societies for taxation and control. But one of the things that may prevent them from doing a cashless society is Sweden realized that if Russia, it's always Russia, if Russia were to invade Sweden and take over Sweden and basically take over the machines, the digital and control, they would have no way to run a resistance because they'd have no cash. So now a lot of countries are realizing it's actually part of national security to actually have a cash economy. So you're starting to see them back off of that. I think what they want to do is corral as many people as possible into a digital and cashless society because it's easier for them to do negative interest rates, for them to kick bad actors that they deem bad actors out of the system, gives them a lot of control. But I think with that control, they don't want somebody else to get that control. So I think they want to keep cash around.
Very good. Thank you. Now, Wolfie wants me to do a Bernie Sanders impersonation. I just don't have the way to be able to do it, to give you all the stuff. You're crazy. I can't do it nearly as good as Smaul Gld can. You know what I'm saying? But I can sing. I made a tape in 1987. It's great. You hear me singing. You're talking about flowers. That's the best I can do, Wolfie. Sorry. Let's see here. Okay, back to the questions here. We've got Health Babe. Do you think the U.S. dollar will become stronger this year to put more pressure on precious metals?
Yeah, unfortunately, the way I look at the U.S. dollar is not in this dollar collapse scenario, which has been going on for 50 years, but that all central banks have a vested interest in keeping the dollar, the euro, the yen, the yuan, all the currencies within a range. So whenever you see the dollar going down or going up too high, other countries help help the U.S. out. They sell dollars, they buy dollars, whatever they have to do to keep it in a range. And right now, what's going to prevent the dollar from going too high is going to be the U.S. will realize that the emerging market countries, which owe a lot of dollar-denominated debt, are going to be harmed by that, and that's going to lead to some coordinated effort to make sure the dollar doesn't go too high. So the dollar doesn't move up and down on the basis of we have unsustainable debt. That doesn't factor into it. That's just out there, and everybody knows that. It's basically how these central banks manipulate each other's currency. There's no interest for the look at Swiss National Bank does. They try to debase their currency all they can. They sold 60% of their gold in order to join the IMF because otherwise they'd be out there with a gold-backed franc and their currency would be way too expensive. So what do? They buy assets, they buy stocks, they print cash. All the central banks engage in shenanigans that mostly involves printing money and issuing debt in order to keep their, and then they'll buy each other's debt in order to keep the currencies within a range.
Yeah. Tricky Guy asked, is there a single event like a black swan, one that's likely to happen that could cause metals to skyrocket?
I know Tricky's been asking me to speculate on that and do like a series of videos to give people hope.
That's always kind of an open-ended question, isn't it? Yeah. Yeah.
Well, there's always something, but I think the mistake is a lot of the prognosticators have been on there shouting since 2013, game changer, this is going to happen, that's going to, it never happens. That doesn't mean it won't happen. You're, oh, they're early. Yeah, something will eventually happen, but it's not going to be what people think it is. And if you can predict what a black swan is, then it's not a black swan. So sure, it probably will.
Unless you take one and antique it from the Perth Mint. Sorry.
That's all right. How's Lydia doing?
Lydia's just lovely, man. Her lips are sweet. Nice.
All right. You still remember that first kiss, huh?
Oh, I'll still never forget that first kiss. 700 BC is when it happened. All right. Let's see here.
An ancient lover.
Tricky Guy, does the economy need a major correction? Tricky Guy asks.
I don't know why this guy's still asking questions. Does he know that this is costing the United States taxpayer a lot of money?
Oh man. All right. Let's see here. What else is next? Everybody's out of questions. Let's see here. Does I may
open up a restaurant? There was something about a restaurant.
Oh yeah, I did see something about a restaurant. Open up a restaurant, import salt bee into my town. Yeah, there we go.
What does that mean?
I don't know, but it's Skywatch Central. He's got a cool channel. He shows some kind of wild sky designs and things. This weird cloud formations and stuff like that. But he likes precious metals too. Pretty diverse community. Let's see here. Dogs allowed in the park. Do you think Trump has made any bad economic mistakes? Tricky Guy wants to know.
You know, you don't know whether someone's made an economic mistake until time passes. So a lot of people are saying, well, these tariffs are a mistake. They could turn out to be genius. Some people say the tax cuts are a mistake. They could be a mistake, but they could turn out to be not just a temporary stimulus, but they may also in turn help reduce the deficit if the economy is strong. You know, there's the Laffer curve where you actually might get more tax revenue because you have a lower tax rate because people spend more, people make more. So
which has happened both in 1962 and in 1988.
Well, we saw last month the U.S. had record tax receipts.
Right, exactly. Yeah, what happens is when you lower taxes, that essentially means that more people get to keep more of their own money, which means that if you have more money to spend, especially if you're a wealthy person and owns a business, you'll hire more people. You hire more people, that brings more people to the tax rolls, which increases the tax base. And then voila, you've got more money coming in the treasury. And by 1988, the federal treasury had almost doubled in tax receipts.
Well, there you go. Yeah, I don't know how the tax, some people are saying it's crumbs like Nancy Pelosi.
Right.
I don't know if it's a mistake. I don't know if it's good. And I don't think we'll know for a few years.
Silver Fox, what is your projected price for gold in 10 years?
Well, let's see, the last 20 years, from 2000 to 2011, we had a big rocket up, right? And then from 2011 to now, it's slightly down. But if you average that all out, it does look like the gold does track to a certain extent the U.S. money supply, although recently, the last 3 or 4 years, it hasn't. So I don't know if gold is going to continue to move the way it has historically because of I think no matter what anyone says about central banks, they don't buy more gold. The only central banks that are buying more gold are those that are actually producing gold, like Kazakhstan, China, and Russia, the central bank. And then Turkey's adding gold, but most of the central banks don't add gold. And I think that's
they just mine it and accumulate it. Yeah.
What I think is happening is we've now moved 3 generations away from gold as being an intricate part of the monetary system, and the people that are at the heads of all these banks grew up, many of them never handling silver or gold, never considering silver or gold as part of the monetary system, and have just always looked at things as debt and levels of debt and interest rates. That seems to be what focuses. It's fascinating to read. If you look at CIA reports from the 60s and 70s, early 70s, when we were still in the gold standard, they talked about gold all the time, where the supply was going to go, what the price was going to be. But that's not important as much anymore. So I don't know if the price of gold is going to track as much as it used to stresses. And we've seen it recently. Gold hasn't been this safe haven when you have the stresses in the financial system. We did see it, though, in Brexit, and then it went away.
Right.
So I don't know. I don't expect gold to skyrocket, but I do expect it to retain its value over the next 10 years. And I think it looks like silver has a spike every 30 or 40 years. So probably in 10 years, it's probably due for a spike for some strange reason, because silver is a small market.
Right.
And there could be, some particular new invention that's going to require silver. Right now, there isn't one that it's eating up so much silver that it's putting stress on the physical supply. But let's say there's some new invention, we don't know about it yet, and it relies on silver, and it's going to take 300 million ounces a year, and that's going to pull a lot of it off the table, and boom, then the price will go up.
Right, exactly. No, yeah. I agree. I mean, I think that by and large, when it's all said and done, 10 years, 20 years out, both silver and gold, I believe, too, will for the most part retain their value, or preserve your wealth. I mean, you look at it, the dollar has lost 11% of its value by some metrics in the past 2 years. And so when you look at that measurement compared to what silver has done, yeah, silver's gone down in price since 2011, quite substantially. But at the same time, look at the markers that we have, and look where we're at. And if you're following it day to day and look at the long-term trend of silver since the year 2000 or since the mid 90s, I think I think that says something, and that's kind of how I look at it as far as that's concerned. Let's see here. Health Babe says, correct me if I'm wrong, but it appears that crude oil and also polite oil and platinum has a very strong correlation in the historical trend. If it's true, do you think platinum will follow?
I studied platinum for a while, and platinum generally, I never really followed the oil platinum ratio, but I followed the gold platinum ratio, and platinum has always been, or almost exclusively, a more expensive metal than gold. Right. And it's only been the last 3 years that gold has passed platinum. And that gives credibility to gold's value as a financial asset and a monetary asset. Platinum never was. Only in the 19th century, when they first found platinum in Russia, did they produce a few ruble type coins, but it's never really been a medium of exchange or a store of wealth the way gold has been. It's always been valued because it's been more rare, and it's a precious metal, and it's even more dense than gold. But the main underpinning for platinum the last 15, 20 years has been its use for reducing the pollutants in diesel, and also that the Japanese women used to buy a lot of platinum jewelry and the Chinese somewhat. And Japanese people have not had the same type of money they had 25, 30 years ago. So they're buying less platinum jewelry, and there's been a move away from diesel. So the platinum demand is down. So that leaves platinum basically fending for itself as a store of
And then
value.
there's the competition with palladium.
Palladium as well, which is actually for the first time higher than
right.
platinum.
Yep.
And but those are metals that they don't have a deep market, and the demand isn't that great. I mean, there's only a few million ounces, I think it's 8 or 9, that are actually mined of platinum every year. And the amount of above ground platinum is not that great. However, I did see information that I think there's 3 times more platinum in the ground right now than there is gold, because
that's right.
people went after and they've. Oh, the other thing I wanted to mention, Sal, I sent you this the other day. This is fascinating about gold in the ground. The World Gold Council said 90% of all the gold that's been mined has been mined since the 1849 gold rush in San Francisco. That is fascinating.
I just posted it today before this video, another article you sent me even prior about the largest gold heist, but I will get to that one as well, because I think that'll be a fascinating story. Because yes, and I've actually shown that in passing with another video showing where most of the gold and silver that's above ground now has been mined since 1900. So it's been a huge explosion of gold mining and silver mining too. Silver mostly as a byproduct from other metals, nickel, lead, and the like.
Right.
But gold as well. Very good. Well, we have other folks joining us in here. We've got Pumpkin Face saying hello. We've got Pumpkin Toot saying hello, and others. And let's see here.
I got a question.
Scott Wordle says, "Did you already address bond breakouts today? When is the next stop for the 10-year 3.28?" Someone said, "Will the Fed go ahead with 3 more hikes this year?" In Lewis's opinion.
Well, we have. I mean, the 10-year I think went over 3, and that's a big deal. One of the things I said back in 2015, I wrote a number of articles on it when all the people in our community were saying the Fed could never raise rates. They'll never raise rates. And after they raised one, they said, well, then they're gonna reverse rates, and they're gonna do QE4 right after it. And I always said that the Fed would raise rates but not necessarily normalize them, just because the whole world is in this zero interest rate, slightly negative interest rate environment. But what the US Fed would do would raise interest rates to give it some breathing room ahead of the other central banks. And they would also at the same time encourage other central banks to do QE. Now, Stanley Fischer was buddies with Mario Draghi, and he convinced the European Central Bank to do QE. And when did they do QE? After the US stopped doing QE. And then Japan, the day the United States finally finished QE, they launched on a new round of QE. So the United States since then, they did a rate hike in 2015, and when they did that hike, it said they'll raise them again. The United States needs to be ahead of the curve, needs to raise interest rates. Also, it helps protect the dollar, because if you put the Treasury bonds on sale, which makes the interest rates go higher, there's an inverse correlation there, then people, foreigners, other investors will buy U.S. Treasuries, if not just to get the additional yield that you won't get when you buy other bonds. And so one of the things people don't know is that, or so you might know this, but Google, Facebook, Apple, they hold 60, and they hold $100 billion in U.S. Treasuries. And why? Because they're considered cash or cash equivalents. They hold them on their balance sheet. And with all the money coming back because of the tax repatriation, I think they're going to buy treasuries with them too. So will the Fed go ahead and raise rates? I think if the market rates naturally go higher, I don't think they'll do 3 this year. The Fed is always, if you look at their projections from Yellen to Bernanke, Fisher, and the minutes, they always predict they're going to raise rates 2, 3, 4, whatever the year is. They end up raising them less than half what they say. So they'll probably do 1 or 2 more, unless there's some type of market correction. But I don't think they'll do 3 this year. They might, but the people who said they could never raise rates were wrong, and they try to say, well, I wasn't as wrong as somebody else. And no, you were wrong. You said they couldn't raise rates. They never raised rates. They've raised them 5 times since 2015, and they'll probably do a couple more.
Well, very good. Well, I'm going to ask just a few more questions here before we wrap it up. Tricky guys got some good ones here. Are you bullish on any non-metal commodity? And what was the other one he asked above here? Let's see. Do you think Bix's Grand Canyon gold statements have any validity?
I don't know. He's done the research. He insists on it, but the research that he's done is based on some newspaper articles from like 1903 or something.
Wow.
I don't know. I haven't researched it myself. I can only say if we haven't heard about it. And I don't know, it's the same one where there's another woman. You say there's like 10 trillion tons of gold on the side of a mountain in the Philippines. That could be. I just don't know anything about it.
Right. Health Babe asked, do you think the central bank will do QE4 when the market starts to tank?
They might, but I think what Janet Yellen said about 3 years ago, she was kind of saying, we're not going to see another financial crisis in our lifetime, whatever that lifetime is. But I think what she was angling for was not a monetization of debt again. She was saying we may need to, although we do not have the authority to buy other assets, meaning act like the Swiss National Bank and actually buy U.S. corporate stocks, bonds, and or equities. I don't think they want to buy. They're trying to wind down their balance sheet now. I don't think they want to launch into another monetization of U.S. Treasury bonds. I think what they'd want to do, especially if there was a crisis, they want to pump up the stock market directly. And I think they would go to Congress, and Congress would be stupid enough to say, sure, go ahead. You know,
right.
we can fix this thing. The stock market is down 60, 70%. How do we get it up? And they say, well, we print the money and we buy stocks.
Yeah.
And they say, okay, go ahead, Fed, do what you got to do. So I don't think they'll do
that roundabout way anyway, I think, because that's where a lot of where the stock market is being pumped up, I think, is by a lot of that money that's gone to those banks, and a lot of it's gone into it. And you may remember in 2013 where it was floated by a policy wonk in the Obama administration about paying off our debt with $1 trillion platinum coin and melting it down after that was paid.
That was Krugman.
That was Krugman. Okay.
Krugman's stupid idea. Yeah.
Yeah. Yeah. Let's see here. Okay. Let's see here. Tricky guy asked, who do you listen to on YouTube? Is there anybody that stands out for you that you get your, that inspires you, or where you get some information?
Salivate Metal.
No.
Multitude of gratitude.
All right.
All right.
Chuck and Plata says, Lewis, thanks for holding true to your convictions and not backing down to Chris Dwayne. All right. Yes, I'm with you on that. That's for sure.
Well, there's nothing to back down on. I mean, I don't take the view that a particular asset gives you membership to some type of club, and that if you sell that asset or you don't praise that asset, that you should be kicked out of the club.
Right.
I mean, these are, we talked about this the other day on our conversation interview with you. Assets are assets, and people, I think, start to, unfortunately, you get so hooked into listening to a lot of these people on YouTube that you start to treat silver and gold as if they were a family member or your mother, and you become emotionally attached to them, and then you get mad at people if they don't see things your way about a particular asset.
Right.
I try not to get that caught up in it. I think Chris was upset because I covered cryptocurrencies. A lot of people on my channel are upset to say, oh, you covered cryptocurrencies and they're a scam. So, okay, so if they're a scam, they're a scam. I'm just reporting on them. I'm not telling you to buy them. Yeah, I don't care. And I'm telling you right now, I don't care if you buy gold or silver. I try to report on them. And the fact that there are some people that ascribe value to them, whether you do or not, or whether I do, is largely irrelevant. It's what are the markets doing? That's what I view my role is as somewhat of a reporter and analyst, is to say what people are doing. Because my opinion on a lot of stuff is not mainstream. And what people don't realize is that if you believe in gold and silver, those opinions aren't mainstream. But you've been taught that, well, 99% of the country doesn't believe in it, but they will one day. They'll see maybe they won't. You know, you see, I always mention this one, Mark Dice out there trying to show somebody, do you want a chocolate bar or you want a silver bar?
Right.
And they're like, I'll take the chocolate bar.
Right.
These are the people that aren't going to demand silver in a crisis.
Right.
They're going to demand a chocolate bar, probably.
Yeah, exactly. Well, very good. And some great questions. Actually, we have to kind of wrap this up here soon. So we're going to do two more that I see here just in front of me right now. DW asks, any idea of the amount or percent of stocks that the U.S. owns?
The amount? What does that mean?
The percent of the stock market that the U.S. owns.
Well, they don't officially own any of it.
Right,
I know
exactly.
there's the Exchange Stabilization Fund, which, by the way, was funded with the confiscated gold. I don't think people all know that they confiscated in 1933. They then set up the Exchange Stabilization Fund in 1934. I think that the Fed, they do have a trading desk, and I think that they probably do futures, but there's no audit, so it's hard to know. But I know the fact that the Swiss National Bank openly buys U.S. equities, and if you go to COMEX, there is a thing called the central bank discount. So central banks get a discount to play futures markets on the COMEX, which means, and that's why the stock market since 1987 has been nothing but straight up, is because I think the United States realized in 1987 that not just the dollar was a strategic asset, but the U.S. stock market was as well, and they couldn't allow it to ever go down. And that's when Greenspan started the whole thing. He'd been in office 2 or 3 months. Reagan appointed him, and you had the October 1987 stock market crash, and you had Greenspan say the Fed stands ready, willing, and able to put in liquidity. Well, what does that mean? It means that we're going to do whatever it takes. You hear Draghi say that. So these markets, everyone says, well, the free market's going to take over. Not if they're already taken over by the central bank. So I would guess the United States, in some way, shape, or form, either through arrangements with other central banks or directly, is somehow boosting the stock market for sure. But I don't know what percentage stocks they hold. And also they can do it through derivatives where they don't have to hold the stock. So that's outside of my level of understanding of how they do it, but I'm sure they do it.
Very good. Well, thank you for that. All right. The last question, and I thank you guys here, the viewers, for popping in and for asking some great questions for Smaul Gld, who has done a wonderful job answering. Great. The last one will be from Health Babe. What is your strategy to face the upcoming headwind from the stock market?
Well, I don't. Personally, I'm not heavily invested basically in anything. I own a house. And so I would say if you had stocks, and you wouldn't have as many stocks, if you thought that gold would go up if a stock market fell down, then you'd have gold. But the problem with betting against the stock market is we've seen these false crashes in 2016, the beginning of the year 2017. And to the prior question, it just seems that if central banks have the unlimited ability to find capital to buy the stocks, then to me, there's no reason why Tesla should have its market valuation that it has. I mean, it doesn't make any money. It sells very few cars. A few of them blow up, crash, and explode. And yet, that's just a sign that markets, a sane market would never buy a company that loses that kind of money and is reliant on government subsidies. I don't care whether you like Tesla or not. The company is not even close to being profitable. So the stock market shouldn't be where it is if you were dealing with free markets and you were dealing with price PE ratios and things like that, but you're not. And so if governments have a vested interest in boosting the stock market, maybe the headwinds, they'll just divert them and we'll keep right. See, when Trump talks about the stock market, you say, well, that's a mistake. He shouldn't do that because he's going to own it when it crashes. But maybe he always talks and he always seems to know something else. Maybe he knows that they can continue to pump the stock market.
Maybe so, yeah.
The stock market was up the entire Obama administration.
Right.
And it's been up ever since Trump got elected.
Yeah.
It shouldn't, but Right, and gold and silver shouldn't be where they are on the basis of the money printing and the debt.
Right.
So we are seeing one big hologram, and the question is, how long can they? I think they can keep it up forever as long as they, meaning the central banks, are the means of which the entire financial system works. Because it's like if you run the casino, you can make sure that the house always wins.
Exactly. That's
Only
right.
when it's only when the casino goes away that or people play elsewhere that they lose control. But the idea that they can lose control of a game that which they have infinite resources, I don't know.
Yep. I agree. I agree. Definitely. Well, very good. Very good. Wolfman Sachs had mentioned above his Chris Dwayne impersonation. I'm going to do my impersonation of Chris Dwayne. And this is the Fortitude round. Limited micro mintage. Buy this to protect yourself from the coming collapse. Indeed, this will be a parity with everything else. And if you have this, no matter what happens anywhere, this is going to be worth a lot of money because there's very few of these made. So get your Fortitude round now, or else you're not a real stacker. Yeah, I'm just totally kidding, guys, by the way. Just totally kidding.
There it is.
There it is. All right. No, anyways, but well, thank you, Smaul Gld. This has been quite educational and enlightening.
Thank you very much for having me on, Salivate.
Yeah, and it just goes to show you that this community is broad, and we have a wide array of opinions on different. I learned some new things about you in this interview, and so I think it's great, and I certainly appreciate having you on. And for everyone else, if you have a channel, a YouTube channel that's been around for 6 months or more, and you're pretty active, contact me if you would like to be interviewed, because this is what this is about spreading the word about your channel and getting some viewers that you may not, even if you have more viewers and more subscribers than I do, you're gonna touch a different set of viewers. You know, there's gonna be some people who aren't connected to your channel that may be connected with my channel. So it's about getting the word out about your channel. This is what it's all about.
Can I make one before you? Thank you as well. One of the things that I do on my channel, I want to let people know is I have a thing called the Smaul Gld subscriber sound off. You don't even have to have a channel if you want to appear on the show. I'd like to get people. I've had some very fascinating interviews with people who don't have the time or just don't have the interest in having a channel. So if you want to be on the Smaul Gld show, go over to the Smaul Gld, the YouTube channel, and click on the Smaul Gld subscriber sound off playlist, and you'll see I've interviewed most of the people don't have channels. Only recently I just had an interview with Salivate Metal, with Wealth Watchman, and SRS Rocco. But for the most part, the people that I have interviewed are just subscribers that don't have channels, and I really enjoy getting their perspective. So if you're interested, shoot me an email over at smaulgld@gmail, and we can have you on the show then if you're interested in spending. Tricky Guy has been threatening, and he just hasn't pulled the trigger yet. I want to get him on and a few others. So if you're interested in that, please let me know.
Yeah, Tricky Guy is a faithful viewer here. He comes to almost all the streams. I have him on Friday nights. I have him on Sunday nights at around this time, 6 p.m. And so it's always good. Well, thank you again, Smaul Gld. And that's wonderful. It's cool that you interact with your viewers the way you do, for sure, with subscriber sound off. So I want to extend the multitude of gratitude to you, sir, for coming aboard today for this interview and taking questions from the viewers.
Thank you, Salivate Metal, and thanks for everybody who joined us and who will join us when you publish this later on, right?
Yes, it will be processing as soon as I hit stop. Yeah.
All right.
All right, everyone, have a great one. Remember, keep your feet on the stars and keep reaching for the ground. Have a good one, everyone. Take care.